Hey guys, welcome to the channel. If you're new to the channel, what this is me documenting my investment journey, showing all the pitfalls, all the ups and downs with you guys, different thoughts, just kind of document everything like a personal diary, but for you guys to come along for the ride. So in today's video, we're going to go into why I think Apple is the main stock to buy at the moment. We're going to cover Warren Buffett, his thoughts on the bubbles, like for example Tesla at the moment with the high prices they're sitting at. And we're going to cover a few other things and get into my stocks and my portfolio and show you guys where I'm sitting at the moment. So let's jump into it. Okay, first off, let's have a look at the portfolios here we're doing here. Okay, so we're sitting at £4,260, £211 return, 5.22%. So let's see how we've done over the past week. The weeks look kind of good. We had that big up on Monday, kind of came down now. Look at these investments. 3M still down. Yeah, I know what you're thinking. You're thinking AGNC investment. Probably it is a dodgy one at the moment. Even if you look at their dividend sitting at 11.35, we'll see what happens there. Now this is the main one. This is the one I want to talk about, is Apple. Since I purchased them, I got them for £238, $295 when I purchased. And it's just been going up and up and up. I'm up 30% at the moment. I've made £82 and it's just going to continue going up. If you look at the graph. Now people think of Apple, they just think of their products. For example, their AirPods, iMacs, Apple TV, things of that nature, but no, they're a streaming service. They've got the Apple TV, they've got all these other things. They've got Apple Music. You listen to their music, you're going to go Apple. If you watch TV, you're going to go Apple. You're on your computer, you go Apple. You grab your phone, you're with Apple. And now they're making their own chips and stuff. So they're definitely at the top. I see huge potential here. I could see them going up and up. Honestly, if I had a big amount, I would dump it into Apple just now. I think that's really the stock to go for. If you are thinking about going into, even if you got £100, I would just, if you're that worried, like Trading 212 does have fractional shares. I'll have the link in the description if you want to join. They do have the fractional shares, so you could put £50 in, £100, you'll still get your shares. And obviously their dividend at the moment is sitting at 0.58. I know that doesn't sound like much, but still it's growing. Every year they've been growing and growing. They've been growing the whole time. So yeah, I definitely think Apple's the one to go for in my opinion. In other news, let's talk about Tesla. Tesla's been on a crazy. I have them in my portfolio. I don't have much, to be honest. He's even got videos like talking about these kind of bubbles and what he thinks you should do as an investor. So here's a video of him talking about these type of bubbles.
Investors behave in very human ways, which is they get very excited during bull markets and they look in the rearview mirror and they say, I made money last year, I'm going to make more money this year, so this time I'll borrow, or the neighbor says, I wasn't in last year when that neighbor was dumber than I made a lot of money, so I'm going to go in this year. So they're always looking in the rearview mirror. And when they look in the rearview mirror and they see a lot of money having been made in the last few years, they plow in and they just push and push and push on prices. And when they look in the rearview mirror and they see no money having been made, they just say this is a lousy place to be. So they don't care what's going on in the underlying business, and it's astounding. But that makes for huge opportunity, just huge opportunity. I mean, I've lived through roughly half, in an investing sense, about half that period, and I've had that long period of stagnation from 48, from 65 to 82, 17 years. I wrote an article for Forbes in 1979. I just said, how can this be? Pension funds in 1970 put 100 and some percent of their new money in stock because they were wild about stocks. Then they got a lot cheaper and they put a record low in, 9% of their net new money in 1978 when stocks were way cheaper. People behave very peculiarly in terms of the reactions because they're human beings and they get excited when others get excited, they get greedy when others get greedy, they get fearful when others get fearful, and they'll continue to do so. And you will see things you won't believe in your lifetime, and securities markets. And the country will do very well over time, but you will see these huge waves. And if you can stay objective throughout that, if you can detach yourself temperamentally from the crowd, you get very rich. And you won't have to be very bright. I mean, I'm sure you are, but you want, it doesn't take brains, it takes temperament. It takes the ability to sit there and look at something. When I started out in 1950, I would go through and find things at 2 times earnings, and they were perfectly decent businesses, and people wanted jobs at those companies, and everybody knew they were going to be around, and they wouldn't buy them at 2 times earnings, and that's when interest rates were 2.5%. I started selling securities when I was 21, and a Kansas City life insurance company happened to be a fairly prominent company in Omaha, and the policies they sold you, if you were buying life insurance from them, had a built-in assumption of 2% interest. The stock of Kansas City Life was selling at less than 3 times earnings. You were getting 35% if you bought the stock. No question about the soundness of the company. I went to the local agent. I figured, hell, I ought to be able to sell him a few shares of stock. I mean, the guy ought to understand it. He's got his whole life invested in this company. I went to the local agent who'd been with him for 20 years, and his name was Moose. And I said, Mr. Moose, I said, you're selling these policies with 2%. You may even have a few members of your own family, and you can buy into this company whose paycheck you depend on every month, and whose future your beneficiaries of these life policies depend on, and who you're selling them, a 2% investment on, and you get 35% on your money. He said, stocks aren't any good, and I couldn't sell the, I was a lousy salesman. I mean, well, you have to start with that, but it just blew me away. It blew me away. I thought. Sometimes I used to wonder if I was nuts, but those things, the same thing happened. I mean, in 1964, the Dow closed at 864. At the end of 1981, 17 years later, it closed at 865. It moved 1 point in 17 years. Now, that's not a big move. And that, you can't believe how discouraged people were during that period. But, people were living better. So things can go on a long time that don't make sense, but they do come to an end. I mean, the internet thing. I mean, you had these companies selling for many billions of dollars that had practically no prospects of making any money. That's a bubble. But Herb Stein one time said, anything that can't go on forever will end. Now that seems pretty. But think about that, and particularly think about it next time you're trying to do something just because the stock's gone up a whole lot, and your neighbors made money or something. You've got to be, you just have to sit and think objectively and think about, would I buy this whole business? If it's an internet company, it's got 100 million shares out and selling at 100, that's $10 billion. Is it worth $10 billion? If it's worth $10 billion, it's got to be able to give you, 700 or 800 million next year. And if it doesn't give you 700 or 800 million next year, it has to give you maybe 10% more than that the year after and continue to. There aren't a lot of businesses that can do that. And people just go crazy.
Guys, with that being said, that's the end of the video. I hope you enjoyed. Try to keep these videos weekly, keep you up to date with this portfolio, get your input, see what you are doing. I'm loving this community at the moment, honestly. So thanks for everything, and I'll see you next time. Peace.